This is THV 11 This Morning.
Well, buying a home it's scary, let's be honest, especially when it comes to, well, one, applying for the loan, but then handing this massive chunk of money for this down payment.
But there's a new program making the process a whole lot easier. Still ahead, Scott McElmurray with Bank of Little Rock Mortgage will tell us all about it.
In the past, if you wanted to buy a home, a 20% down payment was required. Now, there's a new program that can let you purchase a home with just 1% down. Here to explain, Scott McElmurray with the Bank of Little Rock Mortgage to talk about this brand new program. Hey, thanks so much for your time.
Yeah, absolutely.
We appreciate
Good to see you.
It's exciting for people that want to go out and buy a house because
it is.
This really is a barrier for people trying to move into a house. Just even a $100,000 house, that's $20,000 cash. Who has that? You know.
Well, and it's always been the barrier.
Yeah.
And so there's been some programs that have been developed. FHA with 3% down. Conventional can go as low as 5% down. But this is kind of a new thing.
1%.
1%.
Explain to me how this works.
So basically, the customer has to put in 1% for their money that they contribute. There are closing costs. However, those can be negotiated into the sales price up to 3%. So it is possible for someone to come in with just 1%. Now
you got to pay PMI then, I would guess, right? Because
it's
private
optional.
mortgage insurance.
Yeah, it is actually optional. It's required on this type of loan, so you can pay it on a monthly basis, or you can accept a premium rate, which would be about 1/8 to 1/4% higher, and there would be no mortgage insurance at all.
That would be because PMI is the bane of many people's existence.
That's right.
That's private mortgage interest that makes sure that the bank keeps their money if the house gets foreclosed
That's
on.
right.
So how do people go about getting this? What do you need to qualify?
Well, you do. It does require some pretty good credit. So you have to have at least a 700 credit score. It has a requirement of a 43% maximum debt to income ratio, which is a standard debt to income ratio. However, FHA does allow it to go up a little bit higher than that. So it is a little bit more conservative product. So not everyone can qualify for it in that respect. If you are a first-time home buyer, or everyone on the loan is a first-time home buyer, which is definition is you haven't owned a property in the last 3 years, you will have to go through credit counseling or through home buyer counseling. You can't own another home or piece of property and still use this program. Can't refinance using the program. It's a purchase only. And you can't do any kind of adjustable rates. It's a 30-year fixed, very conservative loan. But it's great for someone who, especially someone who has good credit,
right,
just has that down payment barrier to owning a home.
And is there income qualifications for this as well?
There are, but they're much more expanded than your traditional income qualifications. And again, it's based on the area that you're buying the house to. So many of the areas in Arkansas have no income restrictions.
Yeah, and not only that, but there's a lot of other programs as well. There's the FHA has one. There's the Agriculture Department.
There's a USDA Rural Development Loan. That's a zero down loan. So there's a variety of different programs that allow you to put less down. The Arkansas Development Finance Authority program is a low to moderate income type program that you could literally get in with 1% to zero down. However, it's again income restrictive, and it's a little bit higher interest rate. It does have PMI, those kind of things.
It's a lot of to think about and to go through. So people who want to go through this process and who say, okay, maybe I can finally afford this home, how can they get more advice?
Well, they can give us a call at 501-219-9100. They can go to our website, and you're right, there are a lot of different options, and so our job is to basically lay those options out, listen to the customer's current situation, and really give them kind of options, not we'll give them advice on the products that they could qualify for, but also talk about other things like how long do they think they're going to be in the house, some things that are not necessarily always asked that help drive which program's better.
Right. ARM versus conventional versus all these lovely terms. Well, thank you so much for your time.
Absolutely.
I appreciate it.
Thanks
Good
for having me.
advice, and THV 11 This Morning will be right back.